Starting today's class, we are going to discuss about the next sections. Yes, yesterday's discussion we did about section 40. Current discussion we are going to do about 40A. Yes, this is 40 capital A. We are talking about 40 capital A, where we are going to discuss about some other disallowances. Now, what is 40A, Rahul? Starting with the first section called as payment made to specified persons. Payment made to specified persons. Income tax comes and says that, sir, if you are going to make a payment to someone who is related to you, the likelihood that you will make the payment to this person with any kind of cheating to the government is highly possible. You will try to erode my taxes. And therefore these people have to be extremely careful. Which is why comes section 40A2. Which comes and says that if at all you are going to make a payment to someone, and you find out that this payment is excessive or unreasonable, the assessing officer has the rights to disallow this payment. Rahul, will he disallow the full payment? No, he will only disallow the excess part. Simple example, I am coming and saying I am paying you a salary of 10,000, whereas I should have only paid you a salary of 1,000. Now technically I am trying to lower my profits or increase my profits? I'm trying to lower my profits. If I lower my profits, my tax will increase, decrease. So in case assessing officer can come and say, boss, 1,000 is what I can allow, 9,000 I will disallow. This is section 40A2. Now the question is, paying 10,000 instead of 1,000 will only happen in case of related persons or unrelated persons also? It will happen only in case of related persons. Unrelated persons you won't like to pay because then the money is going out of your account. Yes, you only pay to related persons in order to save taxes. So therefore this section only applies to related persons, which means we need to now understand what do you mean by related persons. Yes, let's read the definitions and let's see what we understand. Starting from the individual part, they're saying relatives means any kind of spouse, brother, sister, linear ascendants and linear descendants. Yes, which means technically if you think about it, it is your side of the family. Your spouse, your brother, your sister, your parents, your grandparents, your son, your grandchildren. Yes, you are technically talking about your related party on the own side. You're not talking about spouse side. You're only talking about your own side. Okay. Second, they're coming and saying any kind of business in which individual has substantial interest. Now, what is the substantial interest, Rahul? Assuming I am Mr. A. I am the individual. I have a partnership firm. In this partnership firm, I am holding 50% profit share. In this partnership firm, do I have control? Don't have control. I have control. So whatever I tell will be decision made, not made. So which means possibility that I will give more expenses to my partnership firm is higher, lower? Is higher. Therefore, they're coming and saying this firm should also be considered. So we call this as a substantial interest scenario. What scenario? Substantial interest scenario. I think we discussed it earlier. If not, I am telling you right now. Substantial interest under income tax means 20%. Means what? 20%. Same as accounts. Accounts you would have heard it for associates. Here we use it for income tax. Substantial interest for me means 20%. So income tax is coming and saying if I find that you have any concern, or an entity in which you have substantial interest, that also is a related person. Now, when I am covering you, I am just not covering you, I am covering your relatives also. People started doing what? Instead of having a firm in their name, they went to their wife. They made the wife the partner. Now, is that partnership firm your concern or someone else's concern? It is someone else's concern. They said no problem, boss, this is also covered. So therefore we are covering both the scenarios. It is either I am having direct substantial interest or my relatives are having direct substantial interest. Yes or no? So what are the two people I am talking about? One is your side of the family, meaning spouse, siblings, linear ascendants, linear descendants, and then any concern in which either you or your relatives have substantial interest. Yes or no? Next, if you are an HUF, they are saying any member of the family and their relatives. Then they are saying any business or profession in which HUF, their member or their relatives have substantial interest. Simple, straightforward. Yes. Next, they're saying any kind of firm. La firm is partners of the firm and their relatives, any business in which they have substantial interest. If you think about it, I'm talking about the owners of the business. I'm talking about the owners of the business. HUF Puerto Rico owners are members. Firm Puerto Rico owners are partners. Individual Puerto Rico owners is himself. So I'm covering them along with their relatives, along with their concern. Yes or no? Directors, company like changes a little bit. Company changes a little bit. I'm just not now covering owners. I'm also covering directors. So I'm saying company Puerto Rico, it is directors. Then any kind of individual who's having substantial interest in the company along with his relatives, meaning shareholders. Then I'm saying any companies under the same management, which means fellow subsidiary like siblings. Then any business or profession in which directors or their relatives have substantial interest. Directors or their relatives have substantial interest. The one thing to keep in mind is here they have not mentioned shareholders. They have not mentioned shareholders, which means there is one shareholder holding substantial interest in your concern. This shareholder has a partnership firm. In that partnership firm, if you go and take money, no problem allowed, because I am not talking about shareholders. I am only talking about directors. Rahul, why is this happening? Understand, to make a decision to buy from someone is lying with the shareholder or is lying with the directors? It's lying with the director. So the person who will make a looping mechanism will be directors or shareholders? Directors. So they said, boss, directors alone I am covering, shareholders I am not covering. So who are the people involved? It is directors of the company, individual having substantial interest, common subsidiary, or any other concern in which director or the company or the relatives of the director have substantial interest. Coming to AOP, again it is members and concerns in which substantial interest. Any other assessees, meaning every assessee, where the company firm having substantial interest in such assessee. Meaning, right now I am not talking about me being someone's associate. I am talking about someone else being my associate. So if someone else also has substantial interest in me, that is also covered. Then directors, partners of such company and their relatives. And the concern order directors and partners. Then any company with same directors or partners. And then any other directors of such common company. If I have to put out a chart for the company part, I'm putting out a chart for the company part. First, I'm saying company order shareholder. In every shareholder are more than 20%. More than 20%. I told substantial interest. Yes or no? Yes. Then I'm saying company order director. Yes. Then I'm saying this company has invested in and associate. Yes or no? This company has invested in some associate. Then I am saying director order relatives. Then I am saying either the director or the relative have a concern, let's say, or a firm. Either the director or the concern have substantial interest, which means it should be more than 20%. Yes or no? Then I am saying this company is owned by a holding company. And this holding company has another subsidiary, which means we both are fellow subsidiary. This is also covered. Yes or no? Yes. Then I am saying there is another company. In this company is also holding more than 20% in me, which means now I am the associate of this company. Yes, so it's the holding associate. Then I am coming and saying director. This director is also working in an other company. This director is also working in an other company. So this is also indirectly related. This is also indirectly related. Yes or no? Yes. Then I'm saying this director or the relatives. So director or relatives are working in an other company. And then I'm saying any kind of holding parent and then any kind of relatives. Any kind of relatives. All these are covered. All these are covered. Yes or no? Yes. Logically, my holding company, my subsidiary company, my associate company, my fellow associate company, my directors or relatives, they having any concern, they having any other company, that is what the simple idea is. Don't mug it up, people. In exam, you'll be able to understand properly. Yes or no? Yes. Now, Rahul, these are the specified persons. They are saying, Rahul, substantial interest means those kind of people who are having more than 20% of voting power or having more than 20% of profit share Either of the two are covered. Yes or no? Now I'm going to ask you some questions. Help me out. Okay. Yes, we are in section 40A2. We are in section 40A2. Yes or no? Yes. Now I'm going to ask you some questions. Tell me what the answers are. First question. There is a person called A. Is this person an individual or a company? He's an individual. What happened is, this person A has gone to someone and purchased a, let's say he's gone to his brother. And he went and he purchased some assets. Purchased some assets. These assets were actually costing only 10,000. But this person purchased it from him for 1 lakh rupees. So what happened is, A went to B and said, dear brother, I want to buy some assets. You give me the assets. B came and said, yes boss, you can take the assets for 10,000. I said, no, I want it for 1 lakh. Yes or no? Yes. So he bought it for 1 lakh rupees. Now assessing officer looked at the transaction and come and said, you should have bought the asset for 10,000. You only bought it for 1 lakh. Therefore, I will disallow 90,000. Is the assessing officer right? Is the assessing officer right? Yes, why? Relative. He got it at less cost or more? He got it at more cost. So A is a relative of B and B has given it at more cost. Therefore, it is correct. Yes or no? Yes, Ritanya? This one has no treatment. The assessing officer is wrong. Rahul, what the hell wrong? Understand, section 40A2 says any expenditure for which payment you make is more than reasonable limits. Is this an expenditure or a capital expenditure? It's a capital expenditure. Do you claim it in P&L, not claim it in P&L? Have you not claimed in P&L? Can you disallow something or not disallow something? You cannot disallow. If you do not even have something in P&L, can you disallow? No. I told you in the first class 4 words. Disallowed means something should be allowed. Have you allowed something? No. So can you disallow something? No. So therefore, is there any treatment? No treatment. There is no treatment. Rahul, people can use this mechanism? Not really. Understand, when we did depreciation, that time I came and told you, if the assessing officer finds out that you have taken an asset for increasing a depreciation, he can recompute the value. He can use that clause and reduce the cost. But here he cannot do anything. He cannot invoke 40A2. Now it makes sense. Focus on the questions properly. Can we go forward? Yes. Question number 2, Rahul. There is a person called A. Okay. He went to B. And he came and said, dear B, my brother, I have some assets in my hand. I have some stock in my hand. I want to sell this stock to you. B came and said, okay, give it to me. Now what happened is, Generally, when A used to sell the stock, he used to sell it for 10,000. He used to sell it for 10,000, but because B is his brother, he only sold it for 2,000. He only sold it for 2,000. He generally sells it for 10,000. Now he has sold it for 2,000. Has the profit increased or decreased? Decreased. Yes, so this is what the transaction is. Assessing officer has come to you and assessing officer is saying, I want to disallow 8,000. I want to disallow 8,000 because you should have sold it for 10,000. You have sold it for 2,000. Is the assessing officer right? Is the assessing officer right? Okay. No, B, it is good for B. No, B should have got it for 10,000, but B got it for 2,000. Can you dispute B? B ka the profit then.
But he has spent lesser than.
So he will pay more tax or less tax? B will pay more tax, right? So there is no problem for B. The problem comes for A only. So now the question is, in the case of A, do you have a problem? Do you don't have a problem? Can assessing officer add 8,000? Yes. Answer is no. Answer is no. Vitania picked it up properly. Understand, section said where any expenditure is treated as unreasonable or excessive. Is this an expenditure or a sale? It's a sale transaction. When it's a sale transaction, can you really have any kind of disallowance happening? No. You can only have it for expenditures. Section is very restricted to expenditures. You make a lower sale also, there is no problem. You make a lower sale also, there is no problem. Yes or no? Yes or no? Rahul, scenario number 3. Scenario number 3. There is a person called A. Okay, there is a person called A. He was running a business. In this business, what happened is, he was doing proper job. Suddenly, his wife came to him one day and came and said, Dear A, I have a brother who is currently unemployed. He's looking for a job very badly. Take him in your office and make him work for some days. Let him become responsible. Now, you are not very interested because it is the brother of the wife. But you cannot do anything because you have to go home also. So you decided, okay, let's have him. You asked him to become an accountant in your company. You gave him 10,000 salary, which is the normal salary. 1 month he worked, 2 months he worked, 3rd month he came and said, I want an appraisal. I told appraisal happens in the year end. It doesn't happen every day. Go work silently. He went and complained. The wife. He went and complained the wife. He told, dear sister, your husband is not giving me correct salary. I want more. Your wife came to you that day and came and said, you increase his salary or no food for you today. You said, how much you want to increase? She said, put another 0 here. So now he is going to be paid 1 lakh salary. He should have only been paid 10,000 salary. So now this person is going to give a salary to a brother-in-law. He is going to make a salary payment of 1 lakh rupees, whereas he should have only paid a salary of 10,000 rupees. Assessing officer is coming to you and saying, dear assessee, I'm sorry, you should have only paid 10,000. You could not have paid 1 lakh. Therefore, I'm disallowing 90,000. Is the assessing officer right or not? No, why? Because it's not covered under. Very good. Again, no treatment. Why, Rahul? Because I told you, whenever we discuss individuals under section 48.2, it is only your left side of the family, not your other side of the family. So which means it is only your own family, and brother-in-law is not a part of your own families. Therefore, this payment will be allowed. This payment will be allowed. Logically also it is right only. No assessing officer will make the disallowance because he also knows what is happening in this home. He will come and say, I am also facing the same issue in my home, pa. I cannot come and make this issue for your home. So I understand your feeling. I understand your feeling. So therefore, he will also not disallow. He will also not disallow. Hypothetically, this is what the idea is. This is what the idea is. This payment will not be disallowed. It will again be continued. In simple words, Rahul, this section is a very specific section. It does not cover into its ambit capital expenditures. It does not cover capital expenditures. It does not cover any sale transactions. It does not cover any sale transactions. It also does not cover any payment to non-relatives. Does not cover any payment to non-relatives. 3 transactions are not even part of the section. 3 transactions are not even part of the section. You do not have to look into it. You do not have to look into it. Yes or no? Yes or no? Yes. Last thing to keep in mind, Rahul, if you are a person called A Limited, if you are a person called A Limited, what are you? You are a company. You are a company. You have a you have a fellow subsidiary. You have a fellow subsidiary. This fellow subsidiary is in Australia. Is in Australia. You entered into a transaction with this fellow subsidiary. You entered into a transaction with this fellow subsidiary where you should have paid him only 10,000. You should have paid him only 10,000, but you ended up paying him 50,000. You ended up paying him 50,000. So you should have paid him 10,000. You ended up paying him 50,000. This is a transaction with a fellow subsidiary who's in Australia. Yes. Can you disallow this payment under 48 to Rahul? Answer is no. Again, no treatment. Rahul, what the issue is here? The issue is that this is a foreign transaction. What transaction is this? This is a foreign transaction. You are entering into a transaction with your associated enterprises. In this transaction, you will be liable for transfer pricing. What will you be liable for? You will be liable for transfer pricing. So income tax comes and explicitly clarifies that if at all a transaction is liable for transfer pricing, assessing officer can do nothing with it. Assessing officer can do nothing with it. If you feel there is a problem in the transaction, refer it to the transfer pricing officer. Refer it to the transfer pricing officer. Now understand there are 2 officers. One officer is called as assessing officer. The other officer is called as transfer pricing officer. Transfer pricing officer specifically deals in your transfer pricing adjustments. In your transfer pricing adjustments, which means those adjustments which happen with your foreign associated enterprises. Since this is a foreign associated enterprise, only transfer pricing can apply and domestic 48.2 cannot apply. Since 48.2 cannot apply, you again can do no treatments. You again can do no treatment. Assessing officer has no power to make any disallowance. Has no power to make any disallowance. He will have to refer this to the transfer pricing officer. Transfer pricing officer will have to make the disallowance for him. Okay, assessing officer suo moto can make a disallowance, Rahul? No, cannot make a suo moto disallowance. Clear, not clear? Yes, we will discuss this when we go to the chapter called as transfer pricing. When we do international taxation, that time we will discuss. Yes or no? Yes. So we already discussed what the relatives are. On the bottom we have given 48.2 only applies in case of payment made and not on case of income earned. Hence no adjustment will be made even in case where the sales were made to specified persons at a price lower than the fair market value of such goods, services or facility. Goods, services or facility. For your reference on the top where you see expenditure, highlight that part. Highlight that part. On the bottom where you see a space, put as only revenue expenditure. Only revenue expenditure. Capex is not covered. What is not covered? Capex is not covered. Capital expenditures are not covered. That is covered under the definition of cost of the asset. It is not covered under Pgbp 48.2. It is not covered under Pgbp 48.2. Yes with me? Yes, can we go forward? Can we go forward? Yes, this is your section 48A2. Moving on to the next section called as 48.3. The next section called as 40A3. This section talks about cash payments. This section talks about cash payments. We have already discussed this many times when we did depreciation, scientific research, specified businesses and all those things. We are now discussing what is called as normal revenue expenditures. Normal revenue expenditures. Income tax in simple words are coming and saying, if you are planning to make any revenue expenditure, and I find out that the revenue expenditure is made more than 10,000, one person one day, more than 10,000, one person one day, and the payment is happening otherwise than by account pay check, account pay draft, electronic clearing system, any other permissible modes, then those kind of expenditures will be permanently disallowed. So I am saying any expenditure which is made more than 10,000 to one person in one day, the expenditure will be disallowed if it is paid otherwise than by account pay check, account pay draft, electronic clearing system, other permissible modes. Be very careful. What we are talking about right now is only those expenses claimed in P&L. Rahul, it was a capital expenditure, check depreciation. Rahul, it was a specified business, check 35 AD. Rahul, it is claimed in P&L, come here. You will not touch this section unless and until it is a P&L item. If it is a capital item, don't come to this section at all. Yes or no? Yes. Next. Full. Yes, that's what I was writing. So let's take some examples. Example number 1. What is happening is there is a person, Mr. A. He needs to make a payment to a person called Mr. B. Now what happened is A wanted to make a payment of 1 lakh to B. What happened is every single day he made him 9,900. Every single day he made him 9,900. He kept on doing that. Every single day he was making a payment of 9,900. Total payment he has to make is 1 lakh rupees. Payment is disallowed, allowed. Payment is allowed. Why Rahul allowed? Because it is less than 10,000. Even if the payment is happening in cash, no problem. Payment is allowed. Yes. Example number 2. I was supposed to make a payment to B of 1 lakh. But what happened is B came and said, boss, 1 lakh and all, I need today itself. Today I want the money. What happened is A went and said, boss, I cannot pay you 1 lakh in your hand, because if I pay 1 lakh, it will be disallowed for me. What I'll do is, you bring 10 more people. So I'll pay 10,000 to you. I'll pay 10,000 to him, B1, then 10,000 to B2, 10,000 to B3. Up to 10 pair I will make 10,000 payments. Yes. Is the payments disallowed, allowed? Payment is again allowed. Why, Rahul? Should be to a single person. It is made to multiple people, therefore allowed. Rahul, A went to B. Came and said, Rahul, I have to make a payment of 1 lakh. The payment structure is like this. First day I made a payment of 8,000. All cash. Next day I made a payment of 11,000. Next day I made a payment of 13,000. Then I made a payment of 2,000. Then I made a payment of 1,500. Then I made a payment of 20,000. This is my payment structure. Every single day. Day 1, day 2, day 3, day 4. Which of the payments are disallowed, Rahul? 11,000 is disallowed. 13,000 is disallowed. 20,000. Rahul, when you are disallowing, will you disallow 1,000 rupees or will you disallow the whole 11,000? You will disallow the whole 11,000. Yes or no? Rahul, I had to make a payment from A to B. I had to make a payment from A to B. What happened is, instead of paying cash, I made the payment by cross check. So I've given him 20,000 rupees by cross to check. Rahul, allowed, not allowed? Not allowed. Understand, I told you, you have to make the payment by account pay check. You cannot make the payment by cross check. Rahul, I did not make the payment by cross check. I made the payment by bearer check. Again, not allowed. Do you know the difference between cross and bearer check? Yes, we discussed, I remember. Where we prepared a check. I said if you give a blank check, it is called as bearer check. Anyone can go in and cash. If you put two lines, it is called as cross check. It means anyone can go in and cash, but it will come to their bank account. In first scenario, it will come to their hand itself. Cross check, it will go to their bank account. If you do double cross and you put A/C, it means now it will go only to the person whose name is written on the check. So if you put pay Rahul, only payment can be taken by Rahul. It will not go to anyone else. Even if I deposit the check or Gayatri deposits the check, payment will come to Rahul. This is a permissible mode. Bearer check is not permissible. Cross check is not permissible because I don't know who will take the money. Any person can go in and cash the money. Therefore, it is not right. Yes or no? This is what the transaction is. So I am coming and saying, Rahul, if you make a payment through account pay check, account pay draft, electronic clearing system, or any other permissible modes, it is allowed as a deduction. Any other payment not allowed as a deduction. You can make combinations. Pay less than 10,000 in one day, allowed. You pay 10,000 to multiple people, allowed. You make payments more than 10,000, the whole payment will get disallowed. And the final thing I am coming and saying, if you are going to make a payment by cross check or account bearer check, that is also disallowed. Now I am a smart person. What I did is, on 31st March, I booked an entry that I have to pay money to Gayatri. So I have put off an entry saying payment to Gayatri account debit to salary expenses account debit to Gayatri. Salary expense account debit to Gayatri. Amount is 30,000. Now tell me, have I made the payment? Not made the payment. I have not made the payment. I have not put a cash entry. I have put a Gayatri entry. Therefore, it is not paid. Then what happened is, on 1st May, I passed an entry called Gayatri account debit to cash. Gayatri account debit to cash, 30,000. Single day, one payment I made, Gayatri to 30,000. Assessing officer came to me and assessing officer said, Dear Rahul, you have made a payment more than 10,000 to Gayatri. Therefore, this payment should be disallowed. I am saying, sir, if you want to disallow, which year will you disallow? He says, Rahul, since you made the violation on 1st May, I will disallow it on 1st May. I am saying, sir, I am sorry, you cannot disallow. Why can't you disallow, ma? From 1st May, your financial year became 24, 25. You booked the expense in 23, 24. So you went to the assessing officer and came and said, Dear assessing officer, even if you want to disallow, there should be an expense first. In 24, 25, there is no expense. Therefore, you cannot disallow. He says, Rahul, then I will do and disallow in 23, 24. Then I'll go and disallow in 23, 24. I'm saying, sir, 23, 24 also you cannot disallow. Because when I closed my books, that time it was an accrued expense. That time it was an accrued expense. That time you had not violated the condition. I had not violated the condition. So you cannot go back to that year also. Now there is a problem. Because I am not able to disallow in 23, 24 also. I am not able to disallow in 24, 25 also. People started doing this for a very long time. Now understand and tell me, Rahul, can you really have a disallowance? Answer is no. But you still want to avoid people doing it. So instead of a disallowance, now you should have something called as, if it is not a disallowance, what else it is? It should be an addition. I told you two words, no? One is either disallowance, other is an addition. So income tax came and said, even if you have not disallowed, no problem. Even if you have not disallowed, no problem. In case the expenditure was claimed in an earlier year, but the payment is happening in a subsequent year, since you have violated a condition, I will deem this as an income. I will deem it as an income. So the provisions come and say, if the expenditure was claimed in the earlier year on account of accrual, in the subsequent year I will claim it as an income. I will claim it as an income. It will be a deemed income. So which means, is this a disallowance or an addition? It's an addition. It's an addition. Understand the difference. Understand the difference. Read the section along with me. It says, where the assessee has incurred any expenditure for which payment is made otherwise than by account pay check, account pay draft, electronic clearing system, or any other prescribed modes, the person to whom the payment is made, if it's a single person in a single day, the payment will be disallowed. The payment will be disallowed. If the expenditure is allowed as a deduction in earlier year and the payment is subsequently made to a person in a single day exceeding 10,000 otherwise than by account pay check, account pay draft, electronic clearing system, or any other permissible modes, then such payment shall be deemed as an income. The payment shall be deemed as an income. There is an important word here. It's a deemed income, which means, is it an addition or a disallowance? It is an addition. Keep it in mind. While the answer in both will be the same, you will add only. But what words you use makes an impact. What words you use makes an impact. In the first scenario para, you will put disallowed. In the second scenario, you will put it as deemed income. You will put it as deemed income. Yes or no? Yes or no? Yes. On the bottom, highlight this part. Any kind of payment made to bearer check or crossed check will be disallowed. Any payment made by a bearer check or cross check will also be disallowed. You cannot claim that as a deduction. You cannot claim that as a deduction. Yes or no? Now, income tax came and said that, boss, I am telling you that if you make a payment more than 10,000 to one person in one day, it will be disallowed. But there could be some genuine scenarios. There could be some genuine scenarios where I have to violate the conditions. I have to violate the conditions. So I went to assessing officer, income tax department, and I came and said, sir, there are some cases where I have to violate the condition. Therefore, don't give me a disallowance because these are genuine cases. These are genuine cases. Let's discuss those genuine cases. Genuine case number one. Genuine case number one. I came and said, sir, I am planning to hire a lorry. I am planning to hire a lorry. Now this lorry, I am going to give some payment. I am going to give some payment. Why am I hiring a lorry? Because I want transportation of goods. I want transportation of goods. Now, tell me, the person whom I'm hiring, the person who's driving the lorry, the person who's driving the lorry will be a rich person, poor person? Poor person. If I'm planning to send something from Chennai to Delhi, today if I send it, tomorrow it will reach, correct? If I send it today, will it reach tomorrow or will it take 1 week's time? Will take 1 week's time. In this whole 1 week, the driver which is there on the lorry will have to eat food, not eat food. Will have to eat food. If I give him some money in his bank account, do you think he'll be able to eat food, not eat food? No, because this person is poor, rich, poor. Does he have a bank account? Possibly no. Possibly no. Which means I have to give him cash in hand so that he can travel properly. Yes or no? I have to give him cash in hand so that he can travel properly. So I came and said, the assessing officer, dear sir, understand, I am hiring a lorry. It is going to go to Delhi. It is going to take 1 week's time. It is going to take 1 week's time. On a per day basis also, if the person is going to incur 10,000 rupees, if the person is going to incur 1,000 rupees to eat, then money for petrol charges. When he is traveling from here to Delhi, he has to refill petrol. Yes. So I have to give him cash in hand. Will the cash generally increase more than 10,000 or will be less than 10,000? It will be more than 10,000. Do you think I can take a disallowance? No. Assessing income tax department came and said, okay boss, I'll give you one exception. If you make the payments to transport operators, I will increase the limit to 35,000. I'll increase the limit to 35,000. Exception number one. If the payment is happening to a transport operator, the payment can happen up to 35,000. Rahul, I've made 36,000, fully disallowed. Rahul, I've made 31,000, fully allowed. Limit has increased from 10,000 to 35,000. From 10,000 to 35,000. Yes or no? Yes or no? Can we go forward? Yes. Second. I am saying, Rahul, these are the following payments which are covered under Rule 6DD. which are covered under Rule 60D. If you follow these exceptions, you will not be disallowed. You will not be disallowed. Look at the first item. It says payment made to RBI, SBI, Cooperative Bank, LIC, government. Payment made to RBI, SBI, Cooperative Bank, LIC, or government. What kind of payments will you make to these people, ma? What kind of payments are you talking about? What payments are you talking about? What payments will you make to these people? Hey, and LIC and all, what payment will you make? Insurance premium. SBI, what payment will you make? Any kind of interest cost? Yes. Government, what payment will you make? Tax, penalty, interest, all those things. Yes. Tell me, no, the persons who are on the other side. The persons who are on the other side, are they trustworthy persons? Not trustworthy persons. Trustworthy persons, which means if I'm making a payment to them, will that payment will generally be a black money payment or will be a clean payment? Will be a clean payment. Why is the section introduced? Section is introduced for me to capture black money people. Yes, if I make a payment to RBI, can I come and tell that I'm going to make an RBI payment black money? No. SBI? No. Understand carefully, the payments which are being made are made to genuine people. The reasons why the payment are made is because it is a genuine payment. You cannot make a disallowance even if the payment exceeds more than 10,000. Now the word to keep in mind, is the person here is SBI. The person here is SBI. Rahul, I made a payment to ICICI Bank. Allowed, not allowed? Not allowed. Put it in bracket. Private banks, disallowed. Private banks, disallowed. In case in exam they come and say, Rahul, I've made a payment of interest to some ABC Tirumala Bank, disallowed. Even if it is a bank, even if it is interest payment, it will be disallowed because these people you can still transact. If you know the managing director of that bank or you know the regional manager of the bank, you can go and talk to him. You can make some loopholes. This is only covering government organizations. So RBI, SBI, Cooperative Bank, LIC, and government. It's not covering any private players. Yes or no? Yes. Second, I'm saying payment made by letter of credit, mail, telegraphic transfer, book adjustment for transfer between accounts, bills of exchange. Understand? I have drawn a bill of receivable. And I'm planning to make a payment by the bills receivable. Technically, payment has happened. But it is not happened by account pay check, account pay draft, electronic clearing system, or permissible modes. Is it still allowed? Yes, because these are permissible instruments. These are permitted instruments. So income tax is saying, boss, no problem. You can still make the payment. By these modes. Yes. Scenario number 3. I'm saying payment by netting off of dues in the receivables. What is happening? In my books, in my balance sheet, I had assets, I had liabilities. In the assets, I had a person called payment to be received from Karthik, 10,000. Payment to be received by Karthik, 10,000. And in liabilities, I had payments to be made to Karthik, 12,000. 11,000 and 12,000. Payments to be received by Karthik is 11,000. Payments to be made to Karthik is 12,000. Now, you have a same person, one from whom you have to receive money, one from whom you have to pay money. Normally, what will you do? You will go to Karthik and come and say, first pay me 11,000, then I'll pay you 12,000. Or will you come and say, anyway, I have to give you 12,000, you have to give me 11,000. Instead, I will give you 1,000. Yes or no? So what happened is you passed an entry called Karthik account creditor to Karthik account debtor, 11,000 and 11,000. And 11,000. Yes or no? Ask yourself, have you made the payment to Karthik? Not made the payment. You have technically made the payment. 11,000 is no more payable. 11,000 is no more payable. Is this payment happened by account pay check? No. Account pay draft? No. Electronic clearing system? No. Permissible modes? No. But is this a genuine payment? Yes. Because I had to receive money, I had to give money. So I cross-adjusted. Can I disallow this payment? Can I disallow this payment? No. Therefore, income tax comes and says, even though I have not defined the person, even though I have not defined the person, even though I have not defined the mode of payment, it is still a permissible mode and therefore it is allowed. So they said payment made by netting off of dues. Payment made by netting off of dues. Clear? Yes. Next. It says payment made to farmers, cultivators, growers, producers for agricultural and forest produce, poultry farming, poultry products, dairy products, fish products, horticulture and apiculture. There are two words which are very important here. Word number one is payment made to farmers. Word number two is payment made for agricultural produce. Payment made for agricultural produce. What do you mean, Rahul? Imagine you are right now in Nilgiris. You went to that Nilgiri store. And in the Nilgiri store, you went and you bought some products. You bought some milk, food, all these items you bought. In Nilgiris, you made a cash payment of 13,000 rupees. Is this payment allowed, not allowed? You bought food and agriculture produce only, but you made the payment to Nilgiris. Allowed, not allowed? Not allowed. Understand, is Nilgiris a farmer? No. What is Nilgiris? Retailer. Yes. So any kind of payments made to traders, brokers, middlemen, not covered. Payments made to traders, brokers and middlemen are not covered. So even if you make the payment to Nilgiris, even though the payment is made for agricultural produce, it will still be disallowed. Yes or no? Scenario number two, Rahul. I have a friend of a farmer. To this farmer, I made a payment of interest. The interest payment is 13,000 rupees. The payment interest is 13,000 rupees. This is a farmer. Has no bank account. I made a payment of 13,000 to him. Will this payment be allowed, not allowed? Will the payment be allowed, not allowed? Payment will not be allowed. Why, Rahul, the payment will not be allowed? Understand, the payment is not happened for agricultural produce. The payment is happened for interest cost. There are two words to keep in mind. Word number one is that it should be a farmer. Second word, it should be for a agricultural produce. Both the conditions satisfied, you get a no disallowance. If none of the conditions are satisfied, you have a disallowance. So two words, both are important. Keep this in mind. There is one question which came in exam very time back. Okay, we have it in special adjustments. I'll show it to you. The question came and said, you are a person who went to mandi. You know what is a mandi? The place where you buy vegetables and all. Yes. So what happened is, the question came and said, you are a person who went to a mandi and you paid 12,000 rupees there for buying apples and oranges and all those things. Okay, so you bought some apples, oranges and all those things. You bought it from a mandi. Question came and said, is this payment allowed, not allowed? Now the question is vague. While it does tell you that you are making the payment for apples, oranges and all, it does not come and tell you that the payment is happening for farmers or middlemen. Yes. So in that question, what happened is, ICAI came and gave two assumptions. Assumption number one, they came and said, if it is assumed that the payment is happening to an farmer, then the payment is allowed. If it is assumed that the payment is happening to a middleman, payment is disallowed. So you can write both assumptions. Both are fine. Can we go forward? Yes. Next, it says payment made to cottage industries who are working without the aid of power. This was introduced back in the times when British was ruling. Cottage was an industry where you used to make a lot of profits. Yes. And most of the people sitting there were poor people because they were doing it without the aid of power. The moment you are doing without the aid of power, it means it's happening manually or it's happening by machines. It's happening manually. So that time and all, big exemptions used to come for all those industries. That still continued. Today, if you ask me, there is no industry without the aid of power. Which means this is not relevant. Can we go for next? any kind of payments made in towns and villages with no banking facility. Hey, you are going to a very backward area. In that backward area, there is no bank itself. There is no bank itself. In that case, payment is allowed. You don't have an option. You cannot come and say, find me a bank. Doesn't work like that. Yes, so the payment is allowed. Next, any kind of payments made to employees for his or her retirement or termination benefits exceeding 50,000. Hey, I am planning to exit an employee. I have to pay him gratuity. I can make the payment of gratuity by 40,000 or 45,000 or 50,000 also. Beyond 50,000 not allowed. So this is the third limit. We already learned two limits. One is 10,000. Other is 35,000. This is the third limit, which is 50,000. Yes. Next, any kind of salary paid to employees temporarily posted for 15 days or more in a place or ship where he does not have a bank account. Imagine, no, you are a person working in a company. Okay, your owner has come and said, I am planning to create a new office in Jammu and Kashmir. For the next 1 month, you are going to work in Jammu and Kashmir. You are going to do a market study and come back. Now, Jammu and Kashmir has the same banks as India or does not have the same banks as India? May not have same banks as India. Yes or no? So I was sent to Jammu and Kashmir and I do not have a same bank account. They have some different bank accounts. I have a different bank account. If I do not take money and go from here, I will starve to death. So I said, no, sir, actually I cannot take money in my bank account. I have to get the money in my hard cash. So before I leave itself, you give me cash. If you end up giving to these kind of persons cash, you are permitted to do it. Because he is temporarily posted for more than 15 days and he does not have a bank account there. Yes. Next items. Payment made for agent for acquiring goods or services. So what happened is I went to my agent. And I came and said, I am planning to do a puja. For this puja, I need some items. Here is 20,000 rupees to you. Go and find puja items. Agent went to 10 different places. From one place he bought garland, from one place he bought agarbatti, from one place he bought foods, from one place he bought sweets and everything. He paid totally 20,000 rupees. Question which then came is, Rahul, is this 20,000 allowed, not allowed? They said it is allowed. Because when you made the payment to agent, you made the payment to agent for buying external products. When the agent went and bought, he bought it from 10 different places. Each place he paid less than 10,000. If the agent was not there, you would have bought it for less than 10,000. So no problem, allowed. Rahul, I went and made the payment to agent. Agent went to one single place and made a 20,000 payment. Disallowed. Understand? Agent payment is allowed, but agent making a further payment is disallowed. So if I am making a payment to an agent, it will be allowed. But if the agent ends up violating the condition, then also I will take a disallowance. Yes. Next, payment made to authorized dealers or money changes against payment of foreign currency or traveler's check in the normal course of business. What is this? I'm planning to travel to foreign. If I'm planning to travel to foreign, I want foreign currency or Indian currency? Foreign currency. For me to get a foreign currency, I'll have to approach some person called as AD bankers. So I went to my AD banker and I came and said, dear AD banker, here is 1 lakh Indian currency. Give me euros. Now, when I'm making the payment to AD banker is a trusted person, not a trusted person? I'm making the payment for getting different currency. I'm getting a payment to make different currency. Is that an illegal transaction? Legal transaction. Allowed, not allowed? Allowed. So if you end up making a payment for a change in currency, then also it is allowed as a deduction. Although technically, if you ask me, I don't know how this is an expense. Because you gave cash, you received cash. At best, what you will put in your P&L is only the foreign exchange loss. Okay. So can you really have any kind of disallowance on account of this? Answer is no. But yes, it is there in the act. So I'm telling it to you. Yes. Next, if you read the next line, what has basically happened is back in 2019, before those periods, what happened is we used to have one more exception. The exception used to come and say that if you make a payment on a day when it's a bank holiday, or the day when there is a bank strike, in that case, that days and all, you can make a payment in cash also. Later on in 2019, Modi Sarkar came and said, I'm sorry, I don't want to continue with this. Because what happened is, the day when strike is happening, that day more transactions started happening. People started paying left, right, black money. And started claiming the whole as deductions, because that day bank was not working. So Mr. Modi Sarkar actually deleted this exception and came and said, anyway, people, today everything has become online. Even if bank is on strike, or even if the bank is on a holiday, the portal is still working. If you want, you can sit at home and itself make a payment. You don't have to come to a bank to make the payment. So you can still sit at home and make the payment. I don't see a reason why I should keep this exception. Therefore, this exception was ignored or deleted. Because of which now income tax does not have this exception, which means if you now make a payment on a day when it's a bank strike or it is a bank holiday, payment will be disallowed. Clear, not clear? Clear. Rahul, what are my prescribed electronic modes? In Income Tax Act, they have prescribed the following modes. What modes are there? Credit card, debit card, net banking, RTGS, NEFT, IMPS, UPI, Beam Aadhaar Pay. Most of the payments you know, yes or no? Yes, credit card you know, debit card you know, net banking you know, RTGS, IMPS and NEFT you know. Yes, what is UPI, Rahul? The payment mode of Amazon, GPay, PhonePe, all these happen through UPI. Beam Aadhaar Pay is something which has not been introduced yet, but government has been deciding that in the future, if you have an Aadhaar card, using Aadhaar card itself, you can make payments. So they are calling it as Beam Aadhaar Pay. Right now not introduced, but it is an exception. Yes or no? Yes. So these are the following modes given to you. Yes or no? Yes. Rahul, now from exam perspective, do I have to read everything? Not required. Not everything comes in exam. I'm telling you a few things, mark it out. Read from exam that much, it is enough. Okay. Item number 1, payment made to banks. What is item number 1? Payment made to banks. I told you, when you make a payment to banks, be careful about the private banks. Next, payment made by netting off. These two items are important. Then payment made to farmers. These are the most important one. This is the most important one. This comes very often. Payment made to farmers. Next, payment made when there is no banking facility. Payment made to employees for either deputation or for retirement. All these items, if you read from exam, it is enough. Along with this 35,000, that is the most important thing. Exam 99% transport operator keeps coming very often. So keep that also in mind. Yes. So reading the section once again, the section comes and says, if you are going to make a payment more than 10,000, one person, one day, other than by account pay check, account pay draft, electronic clearing system, other permissible modes, payment will be disallowed. Payment, if it has happened in the next year, it will be deemed as an income. If you make the payment by bearer check and cross check, disallowed. If you make the payment to transport operator up to 35,000, allowed. If you make a payment to an employee for retirement benefits up to 50,000, allowed. If you make a payment to banks, SBI allowed, private banks not allowed. If you make a payment by netting off, allowed. If you make a payment to a person who's being sent somewhere else for a work more than 15 days, no bank facility, allowed. Payments made on bank strike day, bank strike, disallowed. Bank holiday, not allowed. No bank facility, allowed. All these are cases. Clear? Yes, keep this in mind. This is a very famous section which keeps coming once in a while. Okay, compulsory question, one line item will say there is a person to whom you have made a payment. You should say 40A3. Check for the conditions. Allowed, unallowed, not allowed, not allowed. Clear, not clear? Clear? Can we go forward? Next one, disallowance of provision for gratuity. Income tax is coming and saying, if at all you make a gratuity provision, if you make a gratuity provision in your books, that gratuity provision will be disallowed. I will not permit you to book any expenses in a gratuity. Book any expenses in gratuity, because understand, gratuity and all, will you pay right now or will you pay 5 years later? You will pay 5 years later. From today itself, if you start making expenses, that is a big problem for me. That is a big problem for me. So they said, Rahul, if you make a payment, if you create a provision for gratuity, I will not allow the expense. I will not allow the expense. Rather, whenever you pay the gratuity, you can claim the expense. You can claim the expense subject to one exception. Subject to one exception. I said, sir, I am actually not just creating a provision. I am just not creating a provision. I have actually created a fund. I have actually created a fund called as gratuity fund. In that fund, I am making the payment, sir. In that fund, I am making the payment. Hey, if you have made the payment to the gratuity fund, technically, has it gone out of my bank account or not gone out of my bank account? It is gone out of my bank account. If it has already gone out of my bank account, it is as good as paid. It is as good as paid. Yes or no? Yes. So income tax is coming and saying, Rahul, if you create a provision, I will disallow. But if you make the payment of the provision to a fund which is approved, I will allow the payment subject to 43B. Subject to 43B. Very famous questions which come in exam. Very famous questions come in exam. It comes and says, gratuity created as per actuarial valuation is 2 lakhs. Gratuity created as per actuarial valuation is 2 lakhs. Out of this 2 lakhs, 1,50,000 was paid in the current year. Was paid in the current year. What will you come and say? You will come and say, sir, gratuity provision fully disallowed. Payment made allowed. So 2 lakhs will be disallowed, 1,50,000 will be allowed, which means 50,000 is disallowed. Which means 50,000 is disallowed. Because in that they have not clarified whether it is approved gratuity fund or unapproved gratuity fund. Just because you do an actuarial valuation does not mean that it is a payment. Okay, valuation has nothing to do with my payments. Valuation has nothing to do with my payments. I will still disallow. I will still disallow. Clear? Not clear? Yes. So what is the provision coming and saying? If you create any provision for gratuity, I will disallow the provision for gratuity, except in a case where you make the payment to an approved gratuity fund within the 43B section. Within the 43B section. Yes or no? Yes or no? Can we go forward? Can we go forward? Moving on to the next one called as exchange fluctuation risk. Moving on to the next one called as exchange fluctuation risk. Now, this is something which is linked to your accounting standards. This is something which is linked to your accounting standards. I think it is AS11, correct? A foreign exchange. AS11 foreign exchange. Ind AS, what is the number, ma? Does someone know? Does someone know what is the number for Ind AS foreign exchange? Ritanya, is your accounts classes over? Okay. Yes. Okay. The point is, accounting standards and Ind AS have a standard called as foreign exchange. This standard of foreign exchange basically comes and says that if you enter into foreign currency transactions where the payment is a little bit delayed, there is a possibility that the currency will change. The moment the currency changes, automatically you will have a foreign exchange loss or a foreign exchange gain. Mamin, can you switch on the AC? Yes. So the provisions are coming and saying that if at all you are going to have a delay in payment or receipt, you will incur something called as a foreign exchange gain or a foreign exchange loss. Possibility is there, not there. Possibility is there. Now, accounting standard come and say that moment you incur any foreign exchange gain or risk, that should be taken to your P&L. So if it is a foreign exchange loss, you will claim it in P&L. If it is a foreign exchange gain, you will offer it in P&L. Yes or no? Yes. So in simple words, the accounting standards come and say that whenever you have any foreign exchange loss or foreign exchange gain, you can charge it off to your P&L. Now, income tax also allows it. There is no problem. Income tax also says yes, no problem. If you have any foreign exchange gain or foreign exchange loss, you can offer it in P&L. But I have a certain problem. Certain problem is like this. What has happened is, I have actually bought a machinery. What have I done? I have bought a machinery. This machinery I bought from foreign, let's say Australia. Let's say Australia. Yes. Now when I bought that machinery from Australia, I got this machinery for 1,000 Australian dollars. 1,000 Australian dollars. Now this was on 1st May 2023. 1st May 2023. Now when I got this machinery, I immediately put it to use. If I put it to use, would I have to capitalize in my books or not capitalize in my books? I have to capitalize in my books. So I pass an entry called machinery account. Now on this day when I pass the entry, I will use the foreign exchange rate as per that date. Yes or no? Assuming on that date it was showing as 80. It was showing as 80 rupees, which means in my books I will pass an entry for 8 lakhs. Correct or not? Yes. Now if I had made the payment of 8 lakhs on that day, there was no problem. Because I know what I had to pay and I paid the full money. Unfortunately, what happened is I did not make the payment. I took it on credit. Which means I passed an entry called to Australian dealer, 8 lakh rupees. Yes. Now I promised the Australian dealer that I will make the payment 2 months later. Now what happened is 2 months later when I was looking at the payment schedule, I thought I have to make a payment of 8 lakhs. But what happened is that day actually Australian dollars became 85. How much did it become? 85. Now the problem is then came to me is, Rahul, when I actually bought the machinery, I thought the machinery will cost me 8 lakhs. But now when I'm making the payment, the machinery is costing me 8 lakh 50,000. Yes or no? So I have incurred 50,000 of foreign exchange loss. Now the problem is accounting standard comes and says that this 50,000 of foreign exchange loss is purely a regular transaction. So accounting standard says you can claim it in P&L. No problem. But income tax comes and says, tell me boss, why have you incurred this foreign exchange loss? Because it is for a revenue item or a capital item? It is a capital item. So accounts forgets income tax logics. Income tax comes and says, I look at the transaction. The transaction is happening using a capital asset, which means I don't see the reason why I should give you this expense today. Income tax comes and says that even in this case, the extra 50,000 which you are supposed to pay, this extra 50,000 will also be capitalized. Will not be allowed as a P&L. So we are taking a different approach from your accounts. Accounts comes and says any foreign exchange gain or loss can be claimed in P&L. Income tax comes and says you claim any foreign exchange gain or loss. The only thing which I will not permit it to you is foreign exchange loss arising from capital assets. Yes or no? So the provisions come and say, if you buy a machinery from outside India, for which the payment is happening on a subsequent date, the foreign exchange gain or loss which you have on this asset should also be capitalized. Which means in this scenario, while my accounts will say my machinery cost is 8 lakhs, income tax will say that the machinery cost is 8 lakh 50,000. Which means I will get depreciation on 8 lakh 50. Accounts will give depreciation on 8 lakhs. Rahul, no. Actually, the asset had become 78. In that case, you were supposed to initially pay 8 lakhs. Now you are only paying 7 lakh 80,000. Are you in a profit scenario or a loss scenario? You are in a profit scenario. In that case, income tax is saying, boss, you remove the extra money. So that your depreciation will also come down. So they said make the number 7 lakh 80,000. In simple words, accounts comes and says whenever you have any foreign exchange gain or loss, charge it off to P&L. Income tax comes and says if the foreign exchange loss is pertaining to a capital asset, I will capitalize. Rahul, will I do it every year? No. I will do it in the year of payment. When I certainly know that there is a loss happening or a gain happening. Yes or no? Yes. Now rule number 2. Accounts has this very weird logic called as MTM. MTM. Have you heard about this word? Have you heard about this word, Ritanya? No. MTM is called as mark to market losses. What is it called as? Mark to market. Now, Rahul, what is this mark to market? What is this mark to market? Understand, accounts has this thing about prudence. Yes or no? Where it comes and says, if you are expecting any losses, claim the losses, claim the losses. Now, what has happened is, I have bought the asset on 1st February 2022. I bought the asset on 1st February 2022 for 1,000 US dollars. Let's say 10,000 Australian dollars. 10,000 Australian dollars. And I'm saying that, Rahul, that day the foreign exchange was 80 rupees. Was 80 rupees. So in my books, I passed an entry for 8 lakhs. I passed an entry for 8 lakhs. Now I have told this person that I will make the payment to you 2 years later. I'll make the payment to you 2 years later, which means for the next 2 years, I don't know what my gain or loss will be. Yes or no? Yes or no? In accounts in this scenario comes and says that, boss, if you don't know what you're ending up paying at any year, if you find out that you're going to have a change, as per the rule of prudence, recognize the change. Recognize the change. So what is happening? I have first done 1st February. My year will close on. My year will close on 31st March 2020 to 1st February and the March 22. Yes, accounts is saying on that day, tell me what is the foreign exchange going on. Tell me what is the foreign exchange going on. I said, Rahul, the foreign exchange is going as 81. Foreign exchange is going as 81. Now, standing that day itself, do you know that you are going to incur 1 rupee loss? Do you know that you are going to incur 1 rupee loss? No, you don't know, because you have still not made the payment. You have still not made the payment. Tomorrow 81 can become 79 also. Tomorrow 81 can become 79 also. But standing on 31st March, do you know that you may incur a loss? Yes. Accounts comes and says, follow prudence. So accounts comes and say, you know, if you had made the payment on 31st March, you would have made a payment on 81. Whereas you bought the asset for 80, which means you know you have a foreign exchange loss. You have a foreign exchange loss. How much loss do you have? 1 rupee per Australian dollars. How many Australian dollars you have to pay? 10,000. Which means they say immediately recognize 10,000 as a loss. Immediately recognize 10,000 as a loss. Hey, tell me, this loss is notional or actual? Is this notional or actual? It is notional, because I have not even made the payment. I still have 2 more years. I still have 2 more years. It is a notional payment. So therefore, will income tax permit it? No. This is called as MTM loss. What is this called as? MTM loss. MTM means mark to market loss. I am marking my products with the market. Market is showing 81. So I am marking my products with the market as 81 and telling that, boss, because the market is right now showing 81, I will incur a loss of 10,000. So accounts will come and say, immediately recognize the 10,000. Immediately recognize the 10,000. Clear? Clear? Now I told 2 years, which means 1 more year is there in the middle, called as 31st March 23. Correct or not? Yes or no? Yes or no? Assuming that today asset becomes 85. Asset becomes 85. Market is showing 85 right now. Accounts will come and say, what? Boss, you bought it for 80. I asked you to recognize 10,000 to make it 81. Now it has become 85, which means you now have an extra 4 loss. You have an extra 4 loss, which means I will ask you to recognize the 4 loss also. I will ask you to recognize the 4 loss also. What is 4, Rahul? It is the difference between 85 and 81, because 85 to 85 rupees were there. 1 rupee I already recognized last year. Balance is 4 rupees. Balance is 4 rupees. Yes or no? Yes or no? Last, when are you going to make the payment? You are going to make the payment on 1st February 24. Yes or no? Hey, is there a middle of the year? Is there any middle year closure? Is there any middle year closure? No, there is no middle year closure. So on 1st February, now you are going to make the payment. You are going to make the payment at 82 rupees. 4 rupees? 82 rupees. Hey, accounts will come and say, Rahul, I have already booked a loss of 5 rupees. Now you are coming and telling me that the gain is 82, which means technically there should have been a loss of only 2 rupees. You have already booked a loss of 5 rupees. So I will ask you to reverse 3 rupees. I'll ask you to reverse 3 rupees. This 3 rupees is called as MTM gain. What is it called as? MTM gain. How much am I going to reverse? 3 rupees. I'm going to reverse 3 rupees. Why am I reversing 3 rupees? Rahul, notice it is 10,000 plus 40,000 plus 30,000 minus. Total becomes 20,000 minus. What is this 20,000 minus, Rahul? This is 80,000 minus 80. 80 minus 82. Yes or no? So what I have done is that extra loss of 2 rupees, instead of recognizing it in the last year, I have recognized it over the years. I have recognized it over the years. Income tax is saying, boss, forget all that nonsense. Forget all that nonsense. I do not want to do this prudence and all that materiality nonsense. Okay, you made the payment, you bought the asset on 80, you gave the asset on 82, therefore 2 is your loss. That full loss I will ask you to recognize in your asset. That full loss I will ask you to recognize in your asset. Yes or no? Yes. This is the difference between accounts and income tax. Accounts comes and says every year end you recognize the loss or a gain. Income tax comes and says recognize it only on payment. Recognize it only on payment. Accounts comes and says recognize it in P&L. Income tax comes and says recognize it in asset. Recognize it in asset. Yes or no? Yes or no? Yes. Understood this concept? Understood this concept? Yes. Yes. Read. It says, yes ma.
So transaction only and the payment will add that 20,000 to your cost of business.
Correct.
During the intermediate years, all those P&L charge will be the same.
Because it is notional. Okay, we'll do an example. Look at the first heading. The heading comes and says, where an asset is acquired from a foreign country on credit or through a foreign currency loan, the exchange difference between the date of capitalization of asset or the date of payment will be adjusted to the cost of the asset. In simple words, foreign exchange gain or loss. In simple words, foreign exchange gain or loss. In simple words, any exchange gain or loss on restatement of the asset at the year end will be disallowed, and the actual exchange difference will be added to the cost of the asset. Will be added to the cost of the asset. Yes or no? Yes. Look at the example. The example says there is an asset which you have acquired on 22nd October 2021 for $1 lakh for $1 lakh when the asset was 62. When the asset was 62. So when you bought this asset, you told that the asset is costing $1 lakh and the price is 62, which means that today, had you made the payment, you would have made a payment of 62 lakhs. You would have made a payment of 62 lakhs. Yes or no? Yes or no? And you made the payment on 5th May 2023. You made the payment on 5th May 2023. What is this 5th May 2023? Is it within the year or after the years? It is after 2 years. It is after 2 years. So you made the payment on 5th May 2023. How much did you make? You made 68. Now notice, you initially bought the asset for 65. When you made the payment, it became 68, which means you incurred 3 lakhs loss. You incurred 3 lakhs loss. Income tax will come and take the 3 lakhs and add it to the cost of the asset. Yes or no? Yes or no? Yes. But what is accounts doing? Accounts is saying, Rahul, exchange rate as on 31st March 22 is 65 and 31st March 23 is 69. You are required to ignore depreciation and tell me how to value the asset. How to value the asset. Now let's do accounts first. Let's do accounts first. In accounts, when did you buy the asset? 22nd October 21. How much did you buy the asset for? $1 lakh. You bought the asset for $1 lakh. And you are saying, Rahul, I bought the asset for $1 lakh. That day exchange rate was 62. Exchange rate was 62. So in your book, so you would have recognized the asset at 62. Asset of income tax will also say 62. No problem, because both are having the same asset. Both are having the same asset. Now, after 22nd October 21, when did you make the payment? May 23. In the middle, there were year closures. In the year middle, there were year closures. First year closure was there from 22nd October 21 ka appuram 31st March 22. 31st March 22. On that date, exchange rate was showing as 65. Exchange rate was showing as 65. Now, accounts will come and say, you initially thought that you have to make a payment of 62. Today, the asset is showing 65, which means you are likely to incur a loss of 3 per dollar. 3 per dollar. How many dollars do you have? 1 lakh. So totally you will incur a loss of 3 lakhs. Accounts will come and say you have to claim it in P&L. Accounts will say you have to claim it in P&L. So what I did in 21-22, I recognized the loss of 1 lakh in 3 lakhs in P&L. I recognized the loss of 3 lakhs in P&L. Yes or no? Yes. Hey, will income tax allow this? Will income tax allow this? No. So income tax said disallowed in the computation. Disallowed in the computation. Then after 31st March 22, you went to 31st March 23. 23 the exchange rate was 69. You initially bought it for 62. Difference was 7. But in that 7 you already recognized 3. So which means now you will recognize 4. So in the next year you ended up recognizing 4 lakhs of loss. Income tax said it is notional, therefore disallowed. Notional, therefore disallowed. Then what happened? You made the payment on 5th May 23 at a price of 68. You recognized already 7 lakhs. You already recognized 7 lakhs. You should have only recognized 6 lakhs. So you came and said, boss, I have extra recognized 1 lakh. I will reverse this 1 lakh. So I will offer it in my P&L. This is a foreign exchange. Gain or loss? Is this a foreign exchange gain or foreign exchange loss? It is a foreign exchange gain. So therefore I am coming and saying in my P&L I will recognize 1 lakh as gain. Will income tax allow? Will income tax allow? No, they will say, boss, notional expense I disallowed. Notional gain also don't offer. So I said reduced from the computation. Reduced from the computation. But what happened at the end of the day? Accounts is done. Accounts is done. Accounts initially recognized 3 lakhs loss, then 4 lakhs loss, then 1 lakh gain, made a 6 lakhs loss in my P&L. Income tax is coming and saying, boss, this 6 lakhs of loss which you have is pertaining to a asset. Is pertaining to an asset. So therefore I will come and say I cannot claim it in the P&L. Income tax will say capitalize. When will you capitalize, Rahul? You will capitalize in the year of payment. When did you make the payment? May 23. So therefore on May 23, right side if you notice, I have said opening WDV is 6 lakh, add additions, opening WDV is 62 lakhs, add additions 6 lakhs, total will become 68 lakhs. Total will become 68 lakhs. Yes or no? Yes or no? Yes. Ma, understood, not understood?
So for this addition of 6 lakhs, we consider it as whole year payment is made after October.
Yeah, 100%. Because the asset is already put to use. This is only an enhancement of asset. I told you, if you are only having an asset, the asset to first to put to use is important. After that, if you do subsequent enhancement also, asset will still be capitalized at 180%, full 100% only. Because you are only making enhancements to the asset. It is not a new asset. Yeah? Can we go forward? Can we go forward? Yes. Now, when we were doing speculative transactions, I was discussing you about foreign exchange. I was telling you, you'll discuss it in SFM. You'll discuss it in SFM, but I gave you a hint. We had something called as forward contracts. What contracts? Forward contracts. Do you remember? Yes. What is a forward contract?
So these are entered to protect from foreign exchange fluctuations.
Very good. Notice the transaction on the top. I came and told you that I bought the asset for 80 and I am now giving the asset payment 82. Now this is purely 82 because I have waited for it. There was market changing every single year. Risk was high, lower. It was high. So what happened is I went to the banks and I came and said, dear bank, I am not happy with this risk and all. I want to be safe today itself. To do one thing, let's enter into a forward contract. Where on this 1st February 2024, I will come to you. Who am I? I am the assessee. I will come to the bank and I'll come and say, dear bank, I want 1 lakh US dollars, 1 lakh Australian dollars. I want 1 lakh Australian dollars. You have to give me 1 lakh Australian dollars. For that 1 lakh Australian dollars, let's today itself agree what is the price. The bank came and said, I will charge you 80.5. How much? 80.5, which means, Rahul, on that day the market is showing 82. I will buy it for 80.5. Is this number fixed? Not fixed. This number is fixed. Rahul, that day market became 78. Can I ignore the contract and do 78? No, you still have to do 80.5. Now in this case, Do you for sure know what your loss will be? Do you for sure know what your loss will be? Yes, because you had bought it for 80. Now it is 80.5. No matter what happens, 80.5 is your final number, which means the 0.5 is your loss. In that case, will I have to worry about all those items? Will I have to worry about all those items? No. In that case, income tax comes and says, boss, in that case, what is your loss? 0.5. This 0.5 will be added to the cost of the asset. This 0.5 will be added to the cost of the asset, because you know for sure this is your loss. You know for sure this is your loss. So this will be added to your cost of the asset. In simple words, when you enter into a forward exchange contract, whatever is the loss or gain on account of the forward exchange will be added to the cost of the asset in the year in which you make the final payment. In the year in which you make the final payment, the difference is only that earlier you were risking it with the market, now you are certain with the market. Now you are certain with the market. Nothing has changed. Nothing has changed. Clear? Not clear? 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 Now there are two things to keep in this mind. There are two things to keep in mind. Rule number one, it should be a foreign asset. Rule number one, it should be a foreign asset. Mandatory rule. Mandatory rule. Rahul, I have taken an Indian asset. I have taken an Indian asset. Will I ever have a foreign exchange loss? No. In that case, do I ever have to worry about it? No. No. Therefore, it is not considered. You only have to consider foreign asset. Mandatory rule number one. Rule number two. Rule number two, understand, it is not always required. It is not always required that you will take the asset on credit. It is also possible that you can take the asset on loan. Possible? Not possible? Possible. Yes or no? Yes. So what has happened is, I actually took the asset on a loan. I actually took the asset on a loan. Now question to you, when you took the asset on a loan, you ended up paying the creditor, didn't pay the creditor. You ended up paying the creditor. The only person who did not pay is bank. In this case also, income tax is saying no problem, boss. If you have taken a loan, whenever you repay the principal, whatever loss you incur on repaying the principal will be added to the cost. Okay, so it doesn't matter if you make the payment to the creditor or you make the payment to the bank. Both the cases you will have a addition to the cost of the asset. Which means now there are two rules. Rule number one, asset should be foreign. Rule number two, if you have taken a loan against the asset, loan should also be foreign. Clear? Not clear? Clear? Rahul, what do you mean? Let's take an example. I'm going to put a scenario. You are going to come and tell me, Rahul, whether the section will apply or not apply. I am saying, Rahul, I have taken a foreign asset. I have not taken a loan. Will this section apply? Not apply? Section will apply, because you are going to make payment to the creditor. Next, I have not taken a loan, but I have bought an Indian asset. Will the section apply? No apply? No. Why? You are going to make payments in Indian currency. Will there be a foreign exchange loss? No. So therefore not applicable. Understand the difference between not applying and not applicable. Not applicable means difference irkadu. Correct or not? Yes. Third scenario. I am saying, Rahul, I have taken a loan from foreign. I have taken an asset from foreign. I have taken a loan also from foreign. Will the section apply? Section will apply. Now in this case, what I will do, whenever I repay the principal, the loss or gain on the repayment of principal will be added to the cost. Yes or no? Next, I am saying, Rahul, I have taken an asset from foreign. But the loan is Indian. Will the section apply? Not apply? Will the section apply or not apply? No. Why? So, understand, it is again not applicable. Why, Rahul, it is not applicable? You have taken the loan in Indian currency. If you have taken the loan in Indian currency, you will make the payment to the foreign person that day itself. Now going forward, you are going to make the repayment of loan in Indian currency, which means will you have a foreign exchange gain or loss? No, because all transactions are happening in India. Therefore, no foreign exchange gain or loss. Yes or no? Yes. Now, Rahul, I have taken a loan from uh, foreign, but the asset is Indian. But the asset is Indian. In this case, will the section apply? Not apply. Here is where the section will not apply. Now understand the difference between not applicable and not apply. Section comes and says when you buy an asset from outside India, which means one of the mandatory conditions in the section is that the asset should be bought from outside India. Is this asset bought from outside India? No. If the asset is not bought from outside India, even if you have taken a loan from foreign, asset will still not be covered. Asset will still not be covered. You are free to go. Yes or no? Yes or no? This is what the criteria are. Any doubts? All clear? Please prepare a post-it and put it in your charts.
So when we enter into the forward contract,
Yeah.
the difference of the contract agreed rate and the exchange rate of date will be added only in the actual year of payment.
Obviously, no, because your contract is going to happen 2 years later. Why will you add it right now itself? You have not even made the payment, no? That was never happening in income tax also. You're talking from accounts perspective? From income tax perspective, anyway, you're not permitted to do it, so you don't have to care about it. From accounts perspective, also you'll stop doing it because mark to market is no more applicable because you've already entered into a forward contract. Okay. In accounts, actually, what will happen? The day when you did this contract itself, that day itself you recognize the whole asset and you leave it off there itself. So you will come and say, anyway, I know the loss, what is going to happen, so I recognize it today itself. Income tax will say disallow in that year and allow it in the year of payment when you capitalize it in the books of account. Please put it out as a post-it quickly. Not apply is in the case of the last scenario where technically you have a foreign exchange loss, but section is not applying because the asset is not foreign. Not applicable is the cases where you don't even have a foreign exchange loss. Notice, no? If you're telling that the asset is from India, will you ever have a foreign exchange loss? No. If the loan is from India, you're going to make the payment in Indian currency, will you have a foreign exchange loss? So those are the cases where it is not applicable. Not apply is the case where foreign exchange will come. Because the loan is from foreign, you will have a foreign exchange loss. But still I'm not saying the section is applicable because it is not a foreign asset. That's what the difference is. If you find it confusing, instead of putting it as not applicable, you can come and say no foreign exchange loss or gain. No foreign exchange difference. Clear? Can we go forward? Yes. This is your 43A. Any doubts? All clear? Yes. This is a little complicated section. People generally don't understand it. Let me know if you didn't understand. We'll do it again. Okay, but if it's clear, then it's clear. Yeah. What is the simple logic about this section? The section comes and says whenever you have any foreign exchange loss or gain happening on a foreign asset, whether it is because you have taken the asset on credit or you have taken the foreign loan or you have taken a foreign loan or you have done a forward contract, whatever it is, in that case, whatever is the foreign exchange gain or loss which you have, you will capitalize in the books of accounts in the year of payment. You will not follow accounting concepts. If at all accounts has put it into your P&L and all, you will disallow it. You will disallow it. Yes or no? Yes. Rahul, what is next section? The next section is 43AA. Next section is 43AA. Now 43A spoke about any kind of foreign exchange gain or loss from assets. And any kind of foreign exchange gain or loss from assets. 43AA comes and says any kind of gain or loss from any other item. Any kind of foreign exchange gain or loss from any other item. Income tax simply comes and says that if you have any foreign exchange gain or loss arising from any other item meaning other than foreign asset, the same can fully be allowed as a deduction or can be fully offered to tax, same as accounts, no difference. You can claim the full thing as an expense or a full thing as a deduction without any challenge. And then they're giving a clarification saying any gain or loss shall be considered for all foreign currency transactions, including those relating to monetary or non-monetary items, translation of foreign financial statements of foreign operations, forward exchange contracts, or FCTRs. What is FCTRs? Foreign currency translation reserve. You will learn all these items in AS11 of accounting standards, and that India is something. On foreign exchange. Yes, where they'll come and teach you what is monetary and non-monetary, translation differences, foreign exchange operations, and any kind of foreign currency translation reserve. Income tax simply comes and says what you do in accounts, follow the same thing with only one difference. If it is a foreign exchange asset, then in that case whatever gain or loss comes will be disallowed. Balance everything same as accounts. Now while I use the word same as accounts, in income tax they use same as ICDS 6. Our next chapter is called as ICDS, which is nothing but Income Computation and Disclosure Standards. Income Computation and Disclosure Standards is a copy paste of accounting standards changed by income tax. Income tax said, I do not want to follow accounts, so I will create my own standards. I have my own ego. I will create my own standards. So I have created something called as ICDS. Rahul, where was ICDS prepared from? It was prepared from accounting standards. So you have basically told what? I will copy your book, but I will change my name. Here and there, what I feel can be changed, I will change. Like foreign exchange asset, all those small changes I will do. So what I will do is when I am doing ICDS, I will give a reference to the accounting standard and I will tell you what happens in accounting standard and what extra do you have in ICDS. That's all. Okay, I will not touch upon so much about what happens in accounting standard because you are supposed to learn it in FR. So I will give you an overview of what happens in FR and then I will tell you what is different in ICDS. As such in exam it does not come so much, but you need to know. Is that clear? Can we go forward? Yes, this is your 43AA. Yes, ma.
Foreign exchange fluctuation for 43AA purposes other than foreign capital.
Yes.
So it will be same treatment as we have given in the accounts.
Perfect.
So here it will be gain or loss computed in accordance which shall be added or it will be no implication, right? Already it will be allowed as a loss, disallowed.
I agree. See, I'm not denying that. My point is when I say added or allowed, income tax always comes and says what you do. Okay, income tax is not looking into where you start from. Okay, so I'm coming and saying if it is a gain you should add, if it's a loss you should reduce. If you have already done it, then no further adjustment. Right? If you notice everywhere else also, I would have come and told, let's say section 36. Okay, in 36 I'm coming and saying any kind of insurance premium which you pay shall be allowed. Okay, now you have already claimed it. That does not mean that I'm doing double claim. I'm saying that if it is already claimed, then no problem, leave it there itself. If it is not, if it is violating the conditions, then I will disallow for you. That's what the idea is. Right? So if you have already allowed it or you have already offered it, no problem, good enough. If you have not done it, then please do it. That's what the idea is. Clear? See, the issue what I'm trying to clarify here is most of the things are as per accounts. Okay, and if income tax is telling that it is as per accounts, it means that accounts should have been done properly. In case your accounts itself is not done properly, start books itself will qualify the statement. Yes or no? Yes, that's what the idea is. I'll tell you a simple example. I had a company in the past. Okay, the company in the past where I was handling, what happened is in that company there was a provision under accounting standards which came and told that any kind of losses which you have to claim it as deduction. You have to put it in P&L. You have to put it in P&L. Company made a decision to capitalize it. Company made a decision to capitalize it. It was in pure violation of the law. Okay, in accounting standard, it was not permitted. So what happened is, accounting standards, the stat auditor, he did what? He did a qualification. He did a qualification. In that qualification, he came and said the company is deciding to capitalize it, whereas you should have charged it off to P&L. Now, income tax came and said that treatment is same as accounts, which means income tax will tell what you have to charge it off to P&L. Income tax will say you have to charge it off to P&L. So what happened is, in income tax computation, we put an extra claim. We put an extra claim. Now, ideally speaking, when I say same as accounts, I should have not done anything, right? But since they made a mistake in accounts, I have to put an extra claim. Otherwise, what will happen? It will not look same as accounts. You understand my logic? Exactly, that's the idea, right? In case you have violated accounts, that does not mean that you can violate income tax also. You have to still follow the income tax policies. Assessing officer will come and say, boss, you have mistaked accounts, so start as put in qualification, which means you know you have done wrong. Now, income tax will not come and let you pay lower taxes or higher taxes just because you've done something wrong and start. He will come and say, I want to follow my policy. So in my policy, I will add, I will add, that's all. Okay. Yeah, in next class, mostly after this chapter we're going to start ICDS. Okay, in the next chapter I will actually come and tell you most of the items are same as accounts, so therefore there is nothing for you to do. Most of the companies which you have also do not do much about it. Okay, but there are 1 or 2 ICDS which are important if you're following India's concepts and everything. So what I do in my office, I will tell you what I do in my office so that you understand this better. Okay, most likely the reason why it is not being impacted to you right now is because none of the companies which you're handling right now is an India's client, I'm assuming.
No, sir, you are there.
Okay, then there is a problem. Then your firm is not doing the right ICDS. I will tell you when we do ICDS, I'll tell you what and all Indias have a problem in that ICDS, and you should have disclosed it there. All right, awesome. Yes, so this is what the concept is. The concept is coming and saying that if you have any kind of foreign exchange gain or loss which is other than a foreign exchange asset, you have to claim it in your P&L if it is a loss, if you have to offer it to tax if it is a gain. Simple straight cut logic. Yes, some examples of this will come in ICDS 6. We will discuss when we do ICDS 6. Can we go forward? Yes. Going forward, mark the next section as the important one, has always come in exam. Has always come in exam. You may have known this from your inter times, but this year there is an amendment. So the section becomes important. We are looking at section 43B. What are we looking at? 43B. This section of 43B basically came and said this: I have certain payments in mind. Who am I? I am income tax. I have certain payments in mind which are very important payments for the market to grow. Because it impacts public at large. These payments I want to ensure that you pay. While I do agree that you want to follow accrual system of accounting, I still need a proof of payment. So income tax is coming and saying, I am defining certain payments to you. These payments, I want a proof that you will make the payment on time. If you give me a proof, I will allow the payment. If you don't give me a proof, I will allow it only on actual payment. In simple words, is this a temporary disallowance or a permanent disallowance? It's a temporary disallowance. The provision comes and says that I am telling you that there are certain payments to be made. Please make the payments on time. If you make the payments on time, I will allow the payment. If you don't make the payments on time, I will disallow the payment and allow it in the year of actual payment. Rahul, now what is this due date? Starting this year, the due dates have changed. So let's focus. First of all, what are the payments? I am telling this is important for public. So think about what public are you talking about. First public important is government. What kind of payments do you make to government, ma? You make payment of taxes. So income tax comes and says, if you are liable to pay any tax, cess, interest, penalty, fees, whatever it is, please make the payment on time. Yes. Second payment to government is payment to Indian Railways. What payment? Payment to Indian Railways. section comes and says, if you are supposed to pay Indian Railways any payment for using their assets, question to you, normal human being, why will they pay Indian Railways? What assets of Indian Railways are you using? Am I talking about the ticket fare? No, because ticket fare and all you cannot take on credit. You have to make actual payments. So that is not covered. What am I talking about? What Indian Railway assets are you talking about which are paid on credit? No idea? Have you seen this train which is brown in color, which will carry coal and everything? Yes, it's called as container trains. These trains are helping you transport. So those carrier trains or container trains which helps you transport are used by players in the market to transport their products from one location to another. Now, when you want to transport, you have three modes of transport. Either you can do it by lorry, or you can do it by flight, or you can do it by train. Generally, why do you use trains? When you have big products, and you have many products that you will transport by train. For example, coal and all. Now, coal and all you cannot transport by air. You definitely cannot transport by truck, because then you need multiple trucks. So I'm saying one train I will book, the whole train will transport lorries. Now here, am I using Indian Railway assets? Not using Indian Railway assets. I'm using Indian Railway assets. So the payment made for that. The reason why we brought this is because people were not paying Indian Railways. They were using their services and then not paying Indian Railways, because coal and all, when you're transporting, will you pay transportation charges in crores or in lakhs? You will pay in crores. Yes, because you're transporting from one place to another, and that too you're transporting the whole train. Imagine on the train there will be 50 compartments. 50 compartments of coal if you're transporting. Will the payment happen in crores or lakhs? Happen in crores. Imagine crores of payment not getting to Indian Railways. Will the railways be able to work or not be able to work? Not be able to work. You're hiring a transporter train. Yeah, you can get credit payments. Yes, you can definitely. How they will fail? Now I will come and say I'll pay you 3 months later, but then I'll not pay you the money. Same logic, same business logic. See, just because it is a government organization does not mean that you have to be on time. No one asks you. Okay, because government also never gives you money on time. Okay, tomorrow if government is compulsorily acquiring a land, do you think government will immediately give you the money? Obviously no. Yes, so we do the same thing. Yes, we come and say if government is not paying us on time, why should we pay on time? Yes, and the problem is Indian Railways do not have these people who can come and follow up. Okay, because they are all people who are working. Government officers are not very excited to come to your home and always keep following up for payments. So they will assume that you will make the payment on time. But if you don't make the payment on time, what happens? You have a loss, correct or not? So therefore they found out this payment and they told this is covered. Yes. So the first payments we discussed is government payments. What payments? Tax, cess, late filing fee, interest and all those things, and payment to Indian Railways. Second, I told boss, payments to banks. What payments do you make to banks? Interest payments you make to banks. So income tax come and told, if you make any kind of interest payments to banks, which banks, Rahul? You're making the payment to a public financial institution, state financial corporation, state industrial investment corporation, scheduled banks, cooperative banks, other than primary agricultural credit society or primary cooperative agriculture and rural development banks, or NBFCs. So if you end up making a payment to any of these parties, for what? Interest on loan. Now, in your study material, the NBFCs have been given as notified NBFCs. The NBFCs has been given as notified NBFCs because your study material was passed in August. After August, recently we got a circular. Notification. We got a notification. In that notification, they have notified the NBFCs. What NBFCs they have notified? They have notified top, upper and middle NBFCs. Rahul, now what does top, middle and upper NBFCs means? I have no idea. Top, middle and lower NBFCs are NBFCs which are notified under NBFC Act. Do you have to know the definition from exam perspective? No. You don't need to know the definition from exam perspective. For you, what is important? It should be a top, middle, or upper NBFC. It should be a top, middle, or upper NBFC, which means you are not covering lower layer. You are not covering lower layer, which means if the interest is paid to a lower layer NBFC, it is still allowed. It is still allowed. It is not allowed if it is made to a top, upper, or middle layer NBFC. Since it is an amendment, please take your amendment pens and highlight this quickly. Please take your amendment pens and highlight this quickly. Yes, it is called as top, upper, and middle layer NBFCs. Yes, so any kind of interest payments made to banks, any kind of interest payment made to banks. Now the bank can be a scheduled bank, it can be an NBFC bank, it can be any kind of bank, it doesn't matter. It doesn't matter. Any kind of payments made to a bank. Yes, yes. Next. I am coming and saying, Rahul, any payments made to employees. Any payment made to employees. So 3 people I covered. First person was government. Second person was banks. Third person is employees. I am saying, Rahul, if you are planning to pay any kind of bonus or commission to your employees, income tax is saying, boss, people in the market keep showing off about bonuses. They come and keep telling their employees, you work hard for me, I will give you bonus. But they never pay. Suddenly what will happen next year? They'll come and say, no, pa, you did not do a good job, therefore no bonus for you. But they will start claiming deductions under income tax. So they said any kind of bonus or commission paid to employees. Now understand, both bonus and commission are fixed payments or contingent payments. They are contingent payments because it depends on your performance. Which means what is not covered? Fixed payments are not covered. What is fixed payments, Rahul? Salary, then HRA, basic, perquisites, all those are not covered. You are only taking a disallowance for bonus or commission. Yes or no? So what is not covered? Fixed payments are not covered. Clear, not clear? Clear. Next payment, Rahul, I am talking about leave encashment. What payment? Leave encashment. Now, what happened is most of the people in the market started coming and telling that, Rahul, if you are working in my company, I will give you something called as leave encashment, which means I am giving you an option. In case you don't use your leaves, you can encash your leaves. Now what happened is most of the people in the market told that I will only permit you to encash the leave after you retire. Now people will retire in 1 year, 2 years, or 50 years. Will take time. Some may take 5 years, some may take 10 years, some may take 50 years. What happened is accounting standard came and said, since you know that your employee is going to stay with you, at the end of the retirement, he will ask you for leave encashment. Do one thing, start booking expenses right away. So what happened is accounting standard came and said, every time you have an employee and the employee you are likely that he is going to encash the leave, start booking an expense today itself. Income tax is telling, boss, leave encashment is not something which you know for certain. Today you are saying that the person may encash, but tomorrow if he takes a leave, what will you do? Will you let him encash? Not encash. You will not let him encash. Second, when he is going to encash, he is going to encash today or 10 years later? 10 years later. If he is going to encash this 10 years later, do you think I should give you expense today itself? No. Therefore, income tax came and said, boss, any kind of leave encashment and all, I will not let you have today. Claim it in the year in which you actually pay the money. Because again, this is also contingent payment. Clear, not clear? Clear. So 2 payments from employee perspective. One payment is called as bonus or commission. Second payment is called as payment for leave encashment. Yes. Third payment which we already discussed is called as employer contribution to funds. What payment? Employer contribution to funds. If you remember when we did funds, I came and told you there are 2 funds, employee employer. Employee does not come into my P&L. Employee doesn't come into my P&L. Employer comes into my P&L. Employer is what I am talking about, 43B. Employer is what I am talking about, 43B. Remove it. Minor. Yes. So I am coming and saying any kind of employer contribution to funds will be disallowed. Because that is the expense which you will claim. That is the expense which you will claim. Rahul, now what is the due date? What is the due date for all these payments? The due date for all these payments are due date of return filing. Due date of return filing. Where did we learn this before? Where did we learn this before? We learned it in TDS. We learned it in TDS. So in this act, there are two places where you have to be careful about the due date of return filing. Place number 1, TDS. Place number 2, 43B. Place number 2, 43B. This section comes and says, if you are planning to make a payment to tax, payment of Indian Railway assets, payment of interest on loan, payment of bonus or commission, payment of leave encashment, payment of employer contribution to funds, all these payments should happen before the due date of filing the return of income. If the payments happen before the due date of filing of return of income, you can claim this in the year of expense. If you don't make the payment before the due date of filing of return of income, I will disallow the expense and allow it in the year of actual payment. I'll allow it in the year of actual payment. We did some examples for TDS, for TA. You remember previous year 23-24, you deducted today, paid it today. Yes, same example. I am saying you should you should pay the money before the due date of return filing. If you make the payment before the due date of return filing, I will allow that payment. If not, I will disallow and allow in the year of actual payment. I will disallow and allow it in the year of actual payment. Yes or no? Yes, this is what the provisions are. Now, Rahul, what is the amendment for the current year? This is before, sorry. Please change it. It is before the specified date. Please change it. It is before. Yes. Now, coming to the amendment. Rahul, what is the amendment? If you remember, I was discussing something about MSME to you. Yes, where I was telling you, if you have to pay any kind of interest to the MSME, it will be disallowed under Income Tax Act. Why is it being disallowed, Rahul? Because I wanted to promote this MSME sector. I wanted people to not hold back MSME payments. But what happened is, until last year also, people were okay to pay that interest. They were saying no problem, interest and paathalam. They were still making delays. MSME sector was not doing so well. So this year was an amendment brought. They said, Rahul, now I am no more bothered just for the interest. I am now bothered about the MSME payment itself. So current year amendment comes and says, if you are going to make any payment to MSME, you need to make the payment to the MSME within the contract due date. If the contract has a due date, please make the payment within the contract due date. At any point of time, the contract due date cannot go beyond 45 days. Rahul, where is this 45 days given? The 45 days is given in MSME Act. You don't have to worry about it. The provision comes and says, if at all you are going to make any payment to MSME, which is not happening within the due date of the contract, the day after the contract due date ends, the payment will get disallowed. So I am saying, Rahul, I have entered into a contract with Mr. Ganesh. Ganesh is an MSME. The due date in the MSME contract says I have to pay the money within 10 days. Pay the money within 10 days, no problem. You pay the money on 11th day, it will be disallowed. That is what the provision says. Rahul, do I have time till the due date of return filing? No. I only have time until the due date of the respective contract. respective contract. Rahul, I have entered into a contract. The contract comes and says I can make the payment on 60th day. I can make the payment on 60th day. First of all, contract is illegal. Contract is illegal because MSME Act comes and says you cannot have it more than 45. You cannot have it more than 45. So that will never come in exam. That will never come in exam. Now, so the provisions come and say if you are going to make a payment to MSME, please make the payment as per the due date of the contract. As per the due date of the contract. If you don't make the payment on the due date of the contract, the payment will be disallowed. Payment will be disallowed. Rahul, payment is disallowed. Will it be permanently disallowed? No. It will be allowed in the year of actual payment. It will be allowed in the year of actual payment. Upper Rahul, what is the big deal? The big deal here is you are not getting the due date of return filing. You are not getting the due date of return filing, which means on 31st March, if you have not made the payment, 1st April, the payment will be disallowed. Payment will be disallowed. It will go automatically to the next year. It will go automatically to the next year. You will not have time until the due date of return filing. You will not have the due date until return filing. Yes or no? Yes. So the provisions come and say that Rahul, if you are going to make a payment to MSME, please make the payment within the due date of the contract. If you don't make the payment within due date of the contract, next day it will be disallowed and will be allowed in the year of payment. Will be allowed in the year of payment. Rahul, what if I don't even put a due date in my contract? What if I don't even put a due date in my contract? MSME Act comes and says if you don't put a due date in the contract, it is deemed as 15 days. It is deemed as 15 days. So if you don't put a agreement, the agreement does not have a date, date will automatically become 15. Date will automatically become 15. If you have put a date, follow the date. If you have not put a date, I will automatically assume 15. I will automatically assume 15. This is what the new amendment is. This is what the new amendment is. Please highlight the amendment fully. Please highlight the amendment fully. Yes, I'm going to give you some examples. Let me know what is happening. Let me know what is happening. Shall we? Shall we? Yes. Example is like this. I have incurred the expense on 1st May 23. I have incurred the expense on 1st May 23. My due date for payment is 1st June 23. My due date for payment is 1st June 23. I have made the payment on 1st September 23. I have made the payment on 1st September 23. Question to you, is this payment allowed, not allowed? Is this payment allowed or not allowed? The payment is allowed. Rahul, what is the issue? Understand, the payment is happening in the same previous year. The payment is happening in the same previous year. While yes, on 2nd June you will disallow the payment. On 2nd June you will disallow the payment. On 1st September you will claim the payment. Are they both in the same financial year or different financial year? Same financial year. If they are in the same financial year, will you take a disallowance? No. Therefore, no problem. It will be allowed. No problem. It will be allowed. Clear? Not clear? Clear? Rahul, scenario number 2. I took a expense on 1st September 23. I took an expense on 1st September 23. My due date for payment, 1st March 23. I took a payment on 1st March 23. My due date for payment is 8th April 23. My due date is 8th April 20. Sorry. 1st March 24. My due date is 8th April 24. I made the payment on 6th April 24. I made the payment on 6th April 24. Question to you, is it allowed in previous year 23-24? Is it allowed in previous year 23-24? Why? Okay. Is it allowed, not allowed? It is allowed. It is allowed. Rahul, why is it allowed? Understand, you have paid it within the due date. You have paid it within the due date. What is your due date? Your due date is 8th. You have paid it on 6th. Is it within the due date? Yes, which means if it is within the due date, you can claim it on actual basis. You can claim it on actual accrual basis. You can claim it on accrual basis. Yes or no? Yes. Rahul, I have incurred it on 1st March 24. My due date is 8th April 24. I made the payment on 9th April 24. Rahul, is this allowed in previous year 23-24? Is this allowed in previous year 23, 24? No. Why? You have paid the payment after the due date. You have made the payment after the due date, and the payment has happened in the year of next year. So therefore, will it be allowed in previous year 23, 24? No. It will be allowed in previous year 24, 25. You get the logic now? You get the logic now? Rahul, I have made the payment before the due date of return filing. Doesn't matter. Doesn't matter. There is nothing to worry. There is nothing to worry. Yes. Last scenario. Rahul, I incurred the expense on 31st March 24. I incurred the expense on 31st March 24. I did not even enter into a due date. I have put no agreement clause. I have put no agreement clause. I made the payment on 14th April 24. I made the payment on 14th April 24. Will it be allowed in 23, 24 or will it be allowed in 24, 25? It will be allowed in 23, 24. Why, Rahul? Very good. Since there is no clause given, it is allowed within 15 days. 15 days meaning due date will become 15th March. You have made the payment on 14th March. Therefore, it is within the due date and therefore it is allowed in previous year 23, 24. Yes or no? Yes, Rahul, last scenario. 1st May 24. I incurred on 1st May 24. My due date is 31st August 24. My due date is 31st August 24. I made the payment on 30th August 24. I made the payment on 30th August 24. I will be allowed as a deduction in the previous year. I will be allowed this as a deduction in the previous year. 24, 25. Why, Rahul?
Because it is permanent dependent.
Understand this carefully. Understand this carefully. You have actually breached your contract first. You have actually breached your contract first. You took a contract incurrence on 1st May. You should have made the payment within 45 days maximum. You have taken a due date of 30th August. First of all, that itself is illegal. That itself is illegal, which means technically there is a disallowance. Technically there is a disallowance because you did not make the payment within 45 days. There is a disallowance because you did not make the payment within 45 days. However, it doesn't matter. It doesn't matter because you will disallow it after 45 days and allow it in the same year of payment. Allow it in the same year of payment. Therefore, provisions are still satisfied. Provisions are still satisfied. Therefore, it will be allowed in the previous year 24, 25 because that is the year of incurrence. That is the year of incurrence. Yes or no? Yes or no? Note down the example in your book quickly. Take a post-it. Note down the example. Maybe just to make it interesting, what I'm going to do is I'm going to change the last date as 20. I'm going to change the last date as 1st March 23, 24. I'm going to change it as 1st March 24. Now, if you notice, while I have made the payment within the due date of the contract itself is invalid, so the payment should be disallowed. The payment should be disallowed and should be allowed only in the previous year 24, 25. And should be allowed in the previous year 24, 25. Yes, note down the examples. Okay, these examples are not such important from exam perspective, but when you read at your home, no, after you go home and you read, these examples will make more sense than the theory. Okay, so if you read the examples, things will become a lot easier for you. That is what the idea is. Done, ma? Can we go forward? Can we go forward? Yes. Ritanya, all done? Yes. Okay. This is what your MSME amendment is. This is what your MSME amendment is. But besides this amendment, the section comes and says that if you have been given a specified date, please make the payment before the specified date. If you make the payment before the specified date, I will allow it as a deduction. If you don't make the payment before the specified date, I will disallow it in the year of incurrence and allow it in the year of actual payment. Now, I'll give you a scenario. What happened is, I am a person, okay, who has taken a loan. Now what happened is, this loan was carrying a 10% interest. So I took a loan, the loan was carrying a 10% interest, and I was paying the interest properly. And now what happened is, in the last 2 years, I was not able to make a single payment. Because I don't have money. So what happened is, interest for the previous year 22-23 and previous year 21-22 were not paid on time. 43B comes and says you will disallow because you have not paid it within the due date of return filing. So these payments both got disallowed for me. Now what happened is, I was in previous year 23-24. I went to the bank and I came and said, dear bank, I know I have defaulted in interest payments. I am not very happy myself. But unfortunately, I am going through a cash crunch. It is not likely that current year also I will be able to pay interest. So there is a problem. Let's come to a settlement. You do one thing. These interest which you disallowed for me, you convert this into a loan. What am I going to do? I'm going to convert this into a loan. Okay, so I'm going to convert this into a loan. This interest will also carry an interest of 10%. Okay, so I'm saying, boss, you convert this interest into a loan and I will pay 10% interest on that. No problem. But I will start paying this interest only from next year. So current year I will not pay a single interest. I'm converting everything into a loan. Yes. Now I went to the assessing officer. And I came and said, dear assessing officer, in last 2 years, interest was disallowed for me because it was not paid. In current year, I have converted this interest into loan. Which means I don't have any more interest. Which means my liability to pay interest has been removed. My what? Liability to pay interest has been removed. Since my liability to pay interest has been removed, there is no liability of interest. You allow me this full payment today itself. Because there is no interest in my books. Am I right or am I wrong? My question is, I have taken an interest, disallowed the interest, current year converted into loan. Since there is no interest showing in my books, I want to claim this as a deduction. Because the section only applies to interest. It does not apply to loan. So I am asking for a deduction of the interest. Am I right or am I wrong? Am I right or am I wrong? Quickly. Wrong. Why? Why are we wrong? Logically, if you ask me, have you really paid the interest? No. What have you done? Your Summa converted into a loan. At the end of the day, is the interest still outstanding? Yes. Have you still impacted the market? Yes. Are the banks able to make money from you? No. Which means you should still take a disallowance. Yes or no? No. But unfortunately, what happened is, legally reading the act, the act only applies on interest. It does not apply on anything else. And therefore, what happened is, most of the courts came and said, yes, what you are telling is right. It is allowed as a deduction. People in the market started doing this now. Whenever they were not able to pay interest, but they wanted to claim a deduction, they went to the bank and they asked for a restructuring and converted everything into a loan. converted everything into a loan. Banks also agreed because they said, boss, the moment it got converted into a loan, and the interest kamale also now you're paying interest. So they were like, earlier I was only getting interest from you, now I'm getting interest on interest. So banks are also okay. And everyone went in the market and they claimed deductions. Income tax became extremely unhappy. Income tax became extremely unhappy, and so therefore was introduced an notification. Therefore was introduced a notification. The notification came and said, if you have any interest to pay and you decide to convert this into a loan and debenture and advance or any other form of liability, it will be still assumed that you have not paid a single rupee. It will be still assumed that you have not paid a single rupee. It will still be assumed that you are outstanding on the interest and will be allowed only in the year in which the new loan is repaid. It will be allowed only in the year in which the new loan is repaid. That's what income tax came and said. So what did income tax come and say? I will not allow this interest to you every year. I will not allow this interest to you just because you have converted the interest. I will only allow the interest in the year in which you convert the pay the converted loan. Pay the converted loan. Yes or no? Logically right? Yes. That is what the section says. Section says, if at all any interest payable on loan has been has been converted into a loan, borrowing, advance, debenture, or any other instrument by which the liability to pay the amount is deferred to a future date. It shall not be deemed that the interest is paid off. Interest shall only be paid off in the year in which the loan is actually repaid. Which loan am I talking about, ma? Original loan or converted loan? I am talking about the converted loan. Look at the example. Example says, assuming Mr. Punctual has not paid interest due to ABC Bank for over 5 years. Which has been disallowed in 43B in the respective years. So for the last 5 years, I have not paid an interest. I have not paid the interest for the last 5 years. The interest payable is 6 lakh per annum, which means totally how much have I not paid? I have not paid 30 lakhs. This 30 lakhs was allowed, not allowed? Not allowed. ABC Bank and Mr. Punctual have entered into a loan restructuring agreement wherein the interest due would be payable in 30 monthly installments. So I am coming and saying I do not have to pay loan. I do not have to pay the interest. I am paying it as loan. How much am I paying? 30 installments, which means per installment I will pay 1 lakh. Per installment I will pay 1 lakh. If Mr. Punctual pays 10 installments in 23-24, Mr. Punctual is paying how many installments? 10 installments. Say Mr. Punctual has decided to pay 10 installments, which means current year he will get 10 lakhs or will he get 30 lakhs? Will he get 10 lakhs or 30 lakhs? He will get 10 lakhs. Why Rahul 10 lakhs? Because understand, total installments were 30. You paid 10, which means per installment you paid 1 lakh. Total you paid 10 lakhs. Current year you only repaid 10 lakhs. Income tax said you will only get the deduction on actual payment. So I am only allowing 10 lakhs. I am not going to allow 30 lakhs. Clear? Yes. So the provisions are coming and saying, if you are converting your interest into loan, I will allow the deduction of the interest only in the year in which you pay the converted loan. In the current year, since I only paid 10 lakhs, I am only getting a deduction of 10 lakhs. Clear? Yes. Perfect. This marks the end of your Pgbp chapter. On a sum level. What is now pending is administrative provisions. How to maintain books of accounts, what is to do in audit, what is to be done for a presumptive taxation and all those things. I will give a very, very high level overview on all those items to you. Okay. We will not be discussing those sections because you have already learnt it in accounts. You have already learnt it in inter, and these are all applicable for individuals and HUFs. It is only applicable for individuals and HUF, not applicable for companies. So it may only come as an MCQ, will not come as a sum. So not so relevant from exam perspective. Okay. So in the next class, what we will do is, for the first 15 minutes, I will quickly take you through what is happening in maintenance, audit, presumptive. Yes. And I will tell you, you have to understand it yourself. We will then be starting with sums. For the next class, my request, starting from the first Pgbp page till today, please read and come. In tomorrow's class, we are going to start with sums. Clear? Yes. Any doubts? Is all Pgbp clear to you? Yes. Tomorrow, before we start the class also, we will also be doing a marathon of Pgbp. We'll also be doing a marathon of Pgbp where I will give you a whole revision of how to read the whole Pgbp in 5 minutes. Okay, so what we will do is we will read a section, you will tell me allowed, not allowed. Okay, that is how we'll do a revision. So we'll do a marathon also, so that what I will do is I will cut out that marathon and put it on YouTube also. The day before exam, if you feel like you want to revise the chapter, you can quickly read that part alone. 5 minutes Pgbp is done for you. Okay, so going forward, every chapter I will also do a revision for you, and I'll cut out that revisions and put it in YouTube for free. Day before exam, you can walk through those revisions. For whichever chapter you feel confusing, you can see these revisions alone and you will be ready for the exams also. Okay, generally in inter I do a marathon. Where I call students for 7 hours, and in a single 7 hours we complete the whole inter subject. Okay, but unfortunately for final level marathon is not possible. 7 hours I cannot complete the subject. So what I'll do is chapter wise I'll give you revisions. Chapter wise, whatever chapter you feel is complicated, that chapter alone you can do the revision from YouTube. Clear? Yes, so we'll do this in the next class. Yes, can you prepare and come for tomorrow? Yes, let's prepare and come. Thank you people, have a good day.